As China's two sessions convene to set the national policy agenda, global attention is focused on Beijing. How are international institutions viewing this year's meetings? I spoke with an economist at a global bank for his insights. China has set a 2026 growth target of 4.5 to 5%. What key signals do you take from this target?
The 2026 growth target were lowered to leave more room for structural transformation. So the range of target 4.5 to 5% is consistent with China's trend growth and also consistent with China's longer term goal, for example, the 2035 goal of doubling the per capita GDP relative to 2020.
What are your main takeaways from this year's government work report? Could you please summarize your focus in 3 words or short sentences?
I would say innovation, domestic demand, and common prosperity. Innovation, quite understandably, China will continue to foster tech-driven growth in order to build the technology independence. So we will see China continue to invest in research and development and have the private sector to play a big role in innovation. And more importantly now is to invest in basic science. And also equally important is to the application of technology in industries. So that will help to improve the productivity of the economy. In an increasingly uncertain world, China will have to rely more on domestic market. So building a unified domestic market become a major theme. Common prosperity also that means the fruit of growth need to be shared more broadly, more fairly. So I think that would suggest an improvement of the income distribution system, but also an equalization of the basic public service.
Among these themes, the first thing you've just mentioned is innovation. So AI is again being prominently featured at 2 sessions. How will such new economic engines shape China's growth trajectory as 2026 marks the start of the 15th five-year plan period?
China's economy is undergoing a transformation, a structural transformation. The share of some of the old industries are falling, and the share of the new industries are rising. And this trend, in my view, will continue in the next 5 years. China has already pledged to have the research and development spending to increase by over 7% per year during the 15th five-year plan, and that I think would help to continue to boost China's high-end manufacturing and the total factor productivity. Another example is related to the service sector. Service sector has been growing faster than the manufacturing in the past few years. And in 2026 and also the 15th five-year plan, China attached greater importance to the service sector, including opening up the sector to foreign investment and also to domestic private investment for telecommunications, medical service, education, and also digital economy.
So what do you see as the next key priorities for boosting domestic consumption in China?
The key to boosting domestic consumption, in my view, is to increase the ability and the willingness of the household to spend money. So the first priority is to ensure full employment and improve the income outlook. So the government this year specifically said they will prioritize employment for the youth, for the graduates, but also in the environment where the artificial intelligence could have negative implications for the labor market. And also the government adopted household, the residential, urban and rural resident household income increase program. So those measures will improve the confidence of the household to spend money. The second one is the social safety net. That could help to reduce the precautionary savings. And thirdly, again, I think the service sector to release the potential of the service sector. That is the key.
With rising uncertainties in global financial markets, how do you see the outlook of the yuan's internationalization?
Rising uncertainty in the global financial market has resulted in a search for alternative safe assets. So we've seen an episode of diversification away from the US dollar asset last April after the so-called Liberation Day. But the problem with the diversification is there is a lack of a market, for example, with the depth and the liquidity comparable to the US dollar market. The gold supply is very limited and the crypto market has been very volatile. So there I see a window of opportunity for China to increase the role of renminbi asset in the global market. So first is about the predictability. The policy environment has been very predictable. And also secondly, China's economic fundamental has been strong. China grew by around 5% in the past couple of years. And also related to that, we see a very strong balance of payment in China. We also see that there is the government increasingly proactive in promoting the role of renminbi internationally. Over time, China market will become increasingly investable, and Hong Kong, in that big picture, will become a very important offshore center for renminbi assets.